Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 5th of May. Today, the key event will be the US employment report for April. The forecast is for NFP to have risen by 185K, a strong number that is consistent with further tightening in the labor market. The unemployment rate is forecast to have ticked up, while average hourly earnings are expected to have accelerated slightly in monthly terms. Despite the potential uptick in the unemployment rate, this looks like another solid report overall, which could amplify speculation regarding a June rate hike by the Fed. The probability for such an action currently stands at 78% according to the Fed Fund futures, so strong jobs data could drive that number higher and thereby support the dollar. Having said that, though, in order for us to become as confident as the market that such action will indeed take place in June, we would first like to see clear signs that GDP growth and core inflationary pressures are regaining speed. Besides the data, comments by FOMC members will be critical to monitor too, as they usually provide a good indication of whether an action is imminent. In that respect, we will hear from both Chair Yellen and Vice Chair Fisher today. Dollar CAD traded higher yesterday, and during the Asian morning today, it managed to overcome the resistance now turned into support barrier of 137.60. The price structure on the 4-hour chart suggests a short-term uptrend, and therefore we would expect the rate to continue trading higher and perhaps target the 138.50 hurdle. Despite expectations of a decent Canadian jobs report today, we believe that strong US employment data could overshadow their Canadian counterparts and may prove the catalyst for the aforementioned rally. As for the bigger picture, on the 27th of April, dollar CAD escaped from the sideways range it had been trading since early September, between the 130 and 136 key territories. This turns the medium-term outlook positive as well and increases the likelihood for the pair to continue trading north in the foreseeable future. Now, coming back to Europe, on Sunday, French citizens will head to the polls once again for the second and final round of their presidential election. The two candidates are Emmanuel Macron and Marine Le Pen. Given the massive market reaction after the first round, when both the Euro and European stock indices surged, we think that much of the Brexit risk has been already priced out of European assets. This is evident by the narrowing spread between the yields of French and German 10-year bonds. As such, we think that the risks surrounding the Euro's reaction from the second round may be asymmetrical and tilted to the downside. A win by Macron is already expected, and thus any further upside in the euro in this case may be relatively modest. On the other hand, a potential Le Pen victory would come as a major surprise for markets and is likely to lead to a significant downside in the euro. Euro-yen continued trading north yesterday, but the advance was stopped at 123.70 and then the rate slid somewhat. The short-term outlook of the pair is to the upside, but we see signs for a setback today due to profit-taking ahead of Sunday's election. We expect the rate to test 123 soon, where a clear dip could aim for the next support of 122.60. Now, in the aftermath of the election, a Macron victory could cause the pair to open with a positive gap above 123.70 and perhaps test the next resistance level of 124.10. On the other hand, if Le Pen wins, the pair may collapse back below the prior downside resistance line taken from the peak of the 15th of December. Sellers may take the opportunity to drive the battle towards the 120.50 territory, marked by the low of the 28th of April. As for the rest of today's highlights, during the European day, the economic calendar is very light. The only indicator that could attract some market attention is Sweden's industrial production for March. Besides the US jobs report, we get employment data for April from Canada as well. The forecast is for the unemployment rate to have held steady and for the net change in employment to have remained in a positive territory. Even though this would be another piece of encouraging data, we doubt that it will have much effect on the Bank of Canada's dovish stance. The bank made it clear at its latest meeting that it will remain dovish until the uncertainties surrounding trade clear up. Therefore, even though the Canadian dollar could gain somewhat on solid jobs data, any such reaction may remain short-lived. Besides Fed Chair Janet Yellen and Vice Chair Stanley Fischer, we have one more speaker on the agenda, San Francisco Fed President John Williams. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.